the start is well in the green, almost 100 points higher now on the Nifty.
The Nifty, as we speak, has scaled at 18,100 mark. 250 points on the Nifty.
Right now, we are sitting with gains of 194 points. We haven't really built on to our gains through the course of the day, but what we've done is managed to hold on to the 18,000 mark.
Most of the stocks on the Nifty pack itself did well, and the Nifty goes home with gains of a rocking 235 points odd.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Stock market snaps 3-day losing streak. Sensex gains over 800 points. Nifty reclaims 18,000. Banks and IT stocks lead the charge. IT stocks rally as global tech names see a strong rebound. HCL Tech's transformation client win and TCS results also support amidst reasonable valuations. DIPAM Secretary Tuhin Kanta Pandey tells CNBC-TV18 that the government and LIC will eventually exit IDBI Bank, adds that exemption to PSUs from minimum shareholding norms will be on a case-by-case basis and only for a specified period. Tata Steel and JSW Steel rise in positive volume trends while valuation concerns weigh on Titan despite a mostly healthy quarter. Paytm's healthy growth and the Reserve Bank's approval of its payments bank managing provide a boost. Reliance capital lenders to decide on a second round of e-auction after Torrent Investments and Hinduja Group sought to revise their bids. All 4 suitors, including may be allowed to bid in round 2. Vodafone idea slides after sources say that a consortium of lenders is likely to be against granting additional loans to the debt-laden telco. Meanwhile, Bharti Airtel perks up on strong brokerage commentary. And here's the lineup of what we have in store for you. It's a packed show today. Manishi Chaudhary of BNP Paribas and Matt Orton of Raymond James Investment give us their expert opinion on the markets. And that's not all. We also get you snippets from CNBC-TV18's exclusive interview with DIPAM Secretary Tuhin Kanta Pandey. But as always, let's start with the day's trading action. Dalal Street has snapped a 3-day losing streak. Sensex gained over 800 points to get back above the 60,000 mark. The Nifty gained nearly 250 points to reclaim 18,000. Positive global cues boosted sentiment. Banks and IT stocks led the rally. Sonia Shenoy is here with the market wrap. Well, thanks for that. It was a strong start to the week on the back of a positive handover that we got from across the globe and a fall in crude that led to an equity market pullback. The Nifty closed with gains of almost 250 points, while the Sensex went up over 700 points, and the Nifty closed above that crucial 100-day moving average of 17,900. It was technology stocks that led the rally today. TCS closed higher by about 3% ahead of its earnings, while M&M was up 3% after the management said that they are looking to become a #1 player in the SUV market. Apart from that, stocks like Bharti Airtel as well led from the front today as CLSA raised the target price on Bharti to 1,040 rupees, and metal stocks like GSPL hit the fresh 52-week high as well. On the flip side, you had Titan that was under pressure post the Q3 business update, while Bajaj Finserv continues to be under pressure as well. All in all, good start to the week, the Nifty ending closer to the high point of trade and above the 100-day moving average. Back to you.
Sonia, thank you so much for joining us with all those details. Let's move on to some market opinion. Manishi Chaudhary of BNP Paribas believes that first quarter will be a period of continued turmoil for the global markets. Adds that metals may be the best buy for short-term investors as well. Listen in.
A sharp increase in the equity markets and the fall in yields that we've seen, that's been engendered by number one, the decline in economic growth and the PMIs, possibly the PMIs, which are a lead indicator. That's possibly been a bigger driver of this expectation of slower growth. Recent rise will possibly have to give up some of the gains that we have seen across global equity markets. We think that the first quarter, at least, if not the first half, is going to be a period of continued turmoil. We might even see another round of, US dollar appreciation compared to the emerging market currencies. We think that the metal space, which has been, the China reopening has been possibly the biggest sentiment booster as far as the industrial metals are concerned, rightfully so. But at the same time, if you're facing a situation of global recession, and we are subscribers to that point of view, particularly in the developed markets, then it's difficult to see how this metal space can perform over a longer term. I think it's kind of fits the bill exactly in in a different or opposite direction. It's perhaps a better bet for short-term investors over the next couple of quarters or so. We are quite positive on the four-wheeler space. What we are seeing here is the classic case of what we call affluent consumption. In fact, that's one of our big themes in India. We are seeing a relatively stronger sales momentum in the four-wheelers, and that too in the upper end of four-wheeler category compared to the two-wheelers. Within the four-wheelers, we would obviously be siding with the market leaders, the players who have a very strong market presence and a distribution reach, and therefore the kind of companies who have very strong pricing power going forward.
Let's stick with the market opinion now. Matt Orton of Raymond James Investment expects financials in India to see an EPS upside. Let's listen in to what he had to say.
India is definitely one country that we've talked about that I do continue to like. It's down about 5% and change from the highs that we had at the, later last year. And so valuations have come down a little bit, but I continue to believe that we will see some EPS upside, particularly in sectors like financials, where I think you can see net interest margin expansion. In IT services, that's been an underperformer lately, but I think that's a little bit more defensive and benefits from some of the need to save money from technology and companies over in the US. So I definitely think there's opportunities.
All right, that is the second market opinion that we just got for you. To the second headline now. ID stocks perked up today after global tech names saw a strong rebound. HCL Tech's transformation client win and TCS results also supported stock prices amidst reasonable valuations. Rima is here with more on valuations in the IT space and what the street is focusing on. Rima, over to you.
For TCS, currently trading at 25.5 times forward multiple. The peak was nearly 32 times, but the average over the last 3 years prior to COVID was about 21 times. Similarly for Infosys as well. Current valuations, 21.5 times, a very sharp derating compared to the peak valuation multiple of 28 times. But again, the pre-COVID 3-year average return was about 17-18 times. So while valuations have corrected, they're still at a premium compared to history. Now let's tell you what brokerages expect from the IT pack. Now UBS says they do not foresee a meaningful downside from current levels for the IT pack, but they expect the sector to trade sideways. Kotak says the sector is stuck in a limbo. They believe the industry will face a tough first half calendar year before green shoots kick in only in the second half. Ambit says it's still not the time to turn constructive on the IT sector. Credit Suisse says it's time to be selective on the sector. They're only going with Infosys as the only outperform because the sector valuations are still expensive and there are still risks of earnings as well as valuation derating because growth is likely to moderate. CLSA is saying that last year the Indian IT underperformed massively. There is a possibility of a trend reversal, which basically means IT does well this time in this calendar year. But the upside is going to get capped because valuations still remain fairly expensive. So they're going to go with only a few select stocks. Infosys, because it's got a defensive portfolio, they've been aggressive on large deals. TCS, they're expecting margins to improve, and there is a potential of a buyback when it comes to TCS in Q1 of FY24. So that could provide that support for TCS. HCL Tech, they're saying there is a possibility that HCL Tech's margin guidance band next year will get revised higher. There will be improvement in margins, so that's why they're positive on HCL Tech. While LTI Mindtree, that's another large player now post the merger, they're expecting healthy growth in LTI Mindtree, and they're also saying the institutional holding in LTI Mindtree is fairly low.
As far as the tech universe is concerned, IT services in India, we actually reduced our position quite significantly in that December churning that we did. The IT services space, after a downturn in the first half of 2022, did reasonably well in this second half, and we think there was a reason behind it. The investor base was actually equating the North Asian semiconductors and chips with the Indian IT service companies But the Indian IT service companies were actually winners. They were winning large orders from the developed market customers or clients.
That's all about the IT space. Let's go to the third headline today. DIPAM Secretary Tuhin Kanta Pandey said the government and LIC would eventually want to exit from IDBI Bank. Speaking exclusively to Sapna Das, Pandey said multiple domestic and foreign players have expressed interest in IDBI Bank as well. Listen in.
Well, I think the transaction advisor, he has advised that there's been good response.
You know, at least at our end, we can safely assume that at least 3 and more bids have come in. And again, in terms of the potential sectors which are represented, mainly banks, non-banks, or is it a healthy mix?
After the initial bids come in, there is a question of checking the bids and the papers, which the transaction advisor does. Also, there is a fit and proper in this case involved right in the beginning with the RBI, and accordingly, I think they will be submitting papers to the qualified ones will be submitting papers to the RBI. And this is a bank. I think it's more like in the nature of financial information and accounting information, not in terms of as much on the physical aspects. But nevertheless, I think 3 to 4 months is a minimum time which is required for due diligence process. Both LIC and government do not intend to stay on there. It's only an interim arrangements that we are there as a financial investor, both in terms of the size of the transaction that it would mean, also because of the upside that we might like to take it in post this investment. Okay. So in both cases, I think both LIC and government, they would like eventually to exit in a time frame which will be defined in future.
All right, that's all about IDBI divestment. But moving on to the insurance space, where December was a weak month according to the data released for the whole sector. Yash Jain is standing by with the specifics. Yash, let's talk about the general insurance data first.
Well, that's correct. So if I speak about the general insurance industry, the numbers have been good. The growth was good. So total general insurance industry premium in the month of December saw a growth of about 13% on a year-on-year basis. Up to the month of December, the growth was 16%. Standalone health insurance companies, the December premium saw a growth of 23%. Up to the month of December, the premium growth was 26%. The problem came with individual players. For ICICI Lombard, the December growth in terms of premium slipped to single digit, growing just at about 9% on a year-on-year basis. Up to December also, the growth is 21%, but that's largely because of the strong growth which the company has seen so far in the year. New India Assurance, the streak of weak performance continues in the month of December also. December premium was down 2%. So far in the month of December, the premium has just grown by about 2% on a year-on-year basis. Finally, Star Health Insurance. Remember, the management told CNBC-TV18 a few days back that the company is trying to shift towards retail health insurance products, and that restricted company's premium growth as well. So December premium, that grew at 16%. Up to December, the premium growth has been 13% for Star Health Insurance.
Okay, so that is about the general insurance data. Yash, talk to us about life insurance data as well from the sector. That was equally weak?
Well, no different story for life insurance in the month of December. The numbers for the industry have been strong, but the same doesn't go for individual players. So for the industry, the December premium was up 10% on a year-on-year basis. Up to December, the premium growth was 31%. Private life insurance companies have done better on an aggregate basis. December premium growing at 15%, premium up to December, that growing at about 18%. Now let's speak about the problem areas, that is the individual players. LIC, December premium just grew at 4% on a year-on-year basis. Up to December, the premium growth is strong, 40%, but largely because of the strong growth seen throughout the year. For HDFC Life, the December premium that fell by 10%. Up to December, the premium growth was just about 6% on a year-on-year basis. Retail AP also growing at just about 23%. iPru Life December premium growing at 5%. Premium up to December growing at 10%. Retail AP down 7%. Max Life December premium growth just 2% up to December, growth of 7%. December retail AP down 10%. Finally, the strongest player, that was SBI Life Insurance. December premium growing at a strong 30% on a year-on-year basis. Up to December, the premium growth stands at a tall 14%. Retail AP also saw a growth of 31% for SBI Life Insurance.
Okay, all right, Yash, thank you for joining us with that roundup. That's all about the insurance space. But it's time for a break now. Stay tuned. We'll be back in a jiffy with the other headlines. Welcome back. You're still tuned into Markets Today here on CNBC-TV18. To the fourth headline now. Business updates. They continue to pour in today with Tata Steel and JSW Steel rising on positive volume trends. Both stocks closed with gains of 2%. Nigel D'Souza is here with the details.
Well, that's right. Tata Steel has delivered its operational performance for the past quarter. And the India business, that's the one that gives majority of its EBITDA. And that, in fact, has done pretty well. The deliveries are up by close to around 7% on a year-on-year basis, while Europe, as well as a smaller part of the business, Southeast Asia, Thailand predominantly, they have seen a bit of a degrowth. But there are a couple of positives in here. I said the India business, well, the deliveries are up by 7%. Keep in mind that exports, there was still a lid out there. Now, in quarter four itself, we'll see some contribution. But the good news is the domestic volumes are up by close to around 11% in spite of exports seeing a degrowth. Europe, it looks weak, but on a sequential basis, it's up by close to around 5%. So you like that as well. And the management has also said that NINL, which is Nilachal Ispat, well, they're gradually wrapping up and hopefully they get to that targeted 1 million tons odd. So that's about Tata Steel. JSW Steel, well, they as well have come up with their upgrade. And the total volumes are up by close to around 17%, coming in on a low base. So that's good news. The India business, India part of the business now, that's done very, very well. That's up by close to around 19%. So you like that. Capacity utilization levels as well have improved from the mid-80s to more than 90%. So all in all, well, with the recent price increases, coking coal costs have cooled off a little bit and the operational performance looks fairly good. Both stocks did well.
Nigel, thank you so much for joining us with all those updates. In fact, Paytm also gained in trade today after its business update for the third quarter. It showed a healthy growth as well. Surbhi is here with all those details. Surbhi.
So their Q3 business updates looks quite strong. Their value of loans disbursed were up 36% sequentially at close to 10,000 crores. Their number of loans disbursed was also up 11% sequentially at close to 1 crores versus 92 lakhs in the previous quarter. The GMV, which is the gross merchandise value, was up 9% sequentially at 3.46 lakh crores. The monthly transacting users, that was also up 6% at 8.5 crores. And the total devices deployed was up 21% at 58 lakhs. Apart from this, over the weekend, the Paytm Payments Bank has received an RBI approval to appoint Sughinder Chawla as its managing director and CEO for 3 years. So all of this is working in the favor of the stock.
Surbhi, thank you so much for joining us with details. Titan and Kalyan Jewellers were also in focus today on the back of their business updates. Mangla Malu is here with the details on what happened with both these companies in the quarter gone by.
Well, it glitters, it is gold, but turns out that some is expensive, some perhaps not. So that's exactly what is playing out in the jewelry sector. If you just take a look at Titan, resilience is what the company has reported this time around. 12% growth in their overall sales, store additions on a consolidated basis at around 111 odd. Let's take a look at their sectors. Jewelry business grew about 11% on a base of 37% growth last year. So that makes a 2-year CAGR of over 23.5%. And quarter on quarter as well, there was a growth of 24%. The company said that sales from studded jewelry actually outpaced the sales of gold jewelry. So that means margins were also better this time around, and they've added 22 new jewelry stores. Other businesses, that was the one that really stood out from Titan this time around. Watches grew by about 14%. Fashion, fragrance, as well as Tanera, which is ethnic wear, both of them grew anywhere between 40 to 150 odd percent. Eyewear grew at around 10%, and Carrot Lane, with a 75% studded ratio, grew at around 50 odd percent. But remember, Titan not particularly cheap. Over 60 times 1 year forward earnings, so as a result of which some profit booking on account of that. But on a much smaller base, Kalyan Jewellers went ahead and reported a revenue growth of 13% on a consolidated basis. Revenue growth for India has been 12%, and non-South markets recorded a much higher revenue growth. Gross margins for them as well grew sequentially, quarter as well as year on year, and they added 5 new Kalyan stores, all 5 of them in the non-South region. So that was one of the triggers for Kalyan Jewellers' growth in outside of their core markets of South India. That stock up 4% as we speak because it trades at a sharp discount to Titan.
All right, Mangalam, thank you so much. So that was all about the business updates that we got today for Q3. Now on to the fifth headline. Reliance Capital lenders will decide on a second round of e-auction after Torrent Investments and Hinduja Group sought to revise their bids. All 4 suitors may be allowed to bid in round 2 as well. Ritu Singh is here to get us the latest.
That's right. The lenders to Reliance Capital are voting on a proposal to allow a second round of e-auction for the company in a bid to avoid a legal wrangle and also to secure better offers. Now, this, of course, comes after 2 of the interested suitors, which is Hinduja and Torrent, sought to tweak or revise their bids after the conclusion of the first round of bidding. And we understand that in this round, the base bid could be set at 9,500 crore rupees in net present value terms, which would include a minimum cash component of around 8,000 crore rupees. However, if the second round does happen, it is not just Torrent and Hinduja, but the all 4 original suitors, they will be allowed to participate, which would include Oaktree as well as the consortium of Piramal and Cosmia. The results of the voting are likely to be declared only later this week. Now, meanwhile, Torrent did move the NCLT seeking a stay on the lender's proposal to conduct another round of e-auction, but Torrent did not get any urgent relief in the matter, and the court will next take up the hearing on the 12th of January. Remember, in the first round, Torrent had emerged as the highest bidder with its offer of 8,640 crore rupees, but Hinduja later revised its bid to 9,000 crores. Torrent had objected to this and gotten an interim stay from NCLT, but the final orders there are still awaited. Torrent also later tweaked its bid without changing the overall figure, offering the entire amount as upfront cash to lenders. So now, if the COC approves the second round of auction and there are no legal hurdles, the entire process will have to start afresh.
Okay, all right. Ritu, thank you so much for bringing us those important details. We'll keep coming back to you as and when there are more updates. But moving on to another CNBC-TV18 exclusive, Voda Idea slid 5% today after sources say that an SBI-led consortium is not in favor of granting additional loans to the company until there is, of course, clarity on government's equity conversion as well. Ritu is back with us. Ritu, give us more details on this one now.
Sonal, it's really a catch-22 situation for Vodafone because on one hand, the government is saying they need some sort of contribution from the promoters in terms of equity to convert the debt into equity and take up stake in the company. And on the other hand, lenders are unwilling to give any more cash or loans to Vodafone unless there's clarity on when the government will eventually convert the debt into equity. So it is a kind of a trap that Vodafone is currently in. It had been knocking on lenders' doors seeking about 7,000 crores in additional loans because it has to repay Indus Towers in various tranches through the year. But at this point of time, it is unlikely that the SBI-led consortium will grant any additional loans at all to Vodafone because they first want to see promoter contribution and they also want to get clarity on government's equity conversion, and also because lenders are worried that this additional loan will only be used to repay the existing debt and not really to invest in fresh business. Lenders also estimate that the immediate requirement for Vodafone Idea to meet its financial dues is upwards of 24,000 crore rupees. So a lot of money is required and they don't really want to throw good money after bad. The total dues, of course, are well over 2.2 lakh crores, which includes the AGR dues. But as of now, for Vodafone Idea, no relief coming in from the lenders at least.
Okay, Ritu, important details there. Thank you so much for joining us. The stock was lower today and ended at a 52-week low as well. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.